Today we are going to learn how to write a journal entry. First of all, what is a journal? Journal is the primary book of accounts in which financial transactions are first recorded. It is also called the book of original entry. So, whenever any transaction happens, it is first recorded in the journal. Now, we will see that there are two kinds of journal entries. One is the simple entry, which involves only two accounts. As you can see in the example, cash account to Mohan account. And then the other type of journal entry is a compound entry, in which more than two accounts are involved. The purpose of a journal is to make it easy for the accountants to prepare ledgers. So, whatever is written in the journal will then be transferred into the ledger. Now, this is the format of a journal in which you'll have date, particulars, ledger folio, and as you might remember, in the previous lecture, when I showed you the cash account, instead of LF, JF was written, which means journal folio. So it's like a cross reference. In your journal, so all the journal entries will be recorded here. The number will be recorded in the journal, and that particular number will be posted in the ledger. And then similarly, whatever is in the ledger will be cross referenced, posted in the journals. After ledger folio comes the debit column and the credit column. Mind you, the debit has to always equal the credit. Before we head on to writing our journal entries, let's once again go over the rules of debit and credit. So, the rule for a personal account is debit the receiver, credit the giver. Real account, debit what comes in, credit what goes out. Nominal account, debit all expenses and losses, credit all incomes and gains. So, what's a personal account? Personal accounts may involve the accounts accounts of human beings, capital, drawings, etc. Real accounts deal with tangible and intangible assets. Nominal accounts deal with expenses and incomes. And now, on the basis of modern classification of accounts, increase in assets are debited whereas decrease is credited. And opposite is used for liabilities. An increase in a liability is credited whereas a decrease is debited. Same goes for capital and revenue. And in expenses, any increase in expense is debited and a decrease is credited. Okay, so journalize the following transactions. Our first transaction is on Ramesh started a business and brought capital in cash rupees for worth 1 lakh. Okay, so here I have already drawn the pro forma of a journal in which Ramesh. So we are creating a journal entry. We are writing a journal. So our first transaction is the date is so it is 2014 1st April. Ramesh started business and brought capital in cash rupees worth 1 lakh. So what are the accounts involved here? We have cash and we have capital. Cash is a real account and cash is coming into the business, so it will be debited. So in my journal entry, I will write cash account debit rupees 1 lakh. Now, capital is a personal account in nature, and the rule is debit the receiver and credit the giver. So, capital is being given to the company, so we will credit capital. Also, know as per the modern approach, any increase in capital will be credited to capital account. Rupees 1 lakh. Now, the next step is writing narration. This is very important and it will get you a mark in this is extremely writing narration will fetch you free marks, okay? So don't forget to write your narration and it always starts with the word being. Being capital introduced in the company. Okay, and then you draw your line and we go to the next entry. Paid into bank 70,000 on 2nd April. So I will write my date here, 2nd April. And now, what are the accounts involved? Paid into bank. That means cash has been deposited in the bank. So the accounts involved here are cash and bank. Now both are real in nature. What is the rule? Debit what comes in, credit what goes out. So what is coming in? Money is coming into the bank. Okay. So bank will be debited. Bank account debit. Rupees 70,000 to cash account because cash is going out. So it will be credited. 70,000 being cash deposited in bank. I I hope my handwriting is not too shabby and you can understand. What is the next transaction? On 3rd April, Ramesh has bought goods for cash rupees worth 5,000. So what are the accounts involved? First we will write down the date 3rd April. Bought goods for cash rupees 5,000. So what are the accounts involved here? Purchase account and cash account. Purchase account is a nominal account. And what is the rule for nominal accounts? Debit all expenses, credit all gains. Purchase in nature is an expense, right? So we will debit purchases. Purchases account, debit to cash account because cash is going out. 5,000, 5,000. Being goods purchased for cash. Now the next transaction is we withdrew cash from bank for office worth rupees 1,000. 4th April. Now the accounts involved here are cash and bank and it is the reverse. Money from the bank is going out and cash is coming in. So cash should be debited. Cash account debit 1,000 to bank account 1,000. Being cash withdrawn from bank for office use. Now, the purpose for which they are withdrawing cash is important. If in the same question, instead of office use, it had been written personal use, then this would have been drawings. Okay, now the next transaction. Sold goods on credit to Krishna, 1500. So, what is the date? First, we write down the date, 13th April. We have sold goods to Krishna on credit. So, what are the accounts involved here? Sales and Krishna. If it were cash, if it were a cash sale, then we wouldn't mention Krishna's name. But because it's on credit, we will create an account in the name of Krishna. So sales is a nominal account and in nature revenue, so it will be credited. And Krishna is a personal account and he is receiving goods. So we debit the receiver. Krishna account debit 1500 to sales account 1500 being goods sold on credit to Krishna. Next transaction. Bought goods on credit from Sham rupees 2250. What is the date? April 20. So what are the accounts involved here? Purchases and Shyam, because we have purchased the goods on credit. So that means we will open an account in the name of our creditor, Shyam. Who is giving us goods? Shyam is giving us goods. And Shyam is also a liability. C will be credited. And purchases. Purchases is a nominal account, so we will debit it. Purchases account debit 2250 to Shyam account 2250. Being goods purchased on credit from Shyam. Now our next transaction, received from cash received from Krishna rupees 1500. Okay. So Krishna is repaying us and he's paying us in cash. Okay. So date, we'll first write the date 24th April. Now the accounts involved here are cash and Krishna. So cash is coming in, right? We will debit cash. Cash account debit 1500 to Krishna account 1500, being cash received from Krishna. Now the next transaction is cash paid to Shyam rupees 1500, no, rupees 2150, and discount allowed by him rupees 100. So in this case, Shyam is giving us a discount. Now, discount, the company is receiving discount. So that makes it a gain. We will write a compound entry in this case. So, what is discount received? It is a nominal account by nature and it is an income. What is the rule? We credit all incomes and debit all expenses. So, the discount that we are receiving by him will be credited. And which account we will debit? We will debit Shyam's account. Okay, because Shyam is giving us. No, because we are paying to Shyam. He is receiving money. So Shyam account debit. I'm writing 2250. See here why. Cash, because we are paying out cash 2150 and 100 rupees we have received a discount. So I will make an account called discount received and I will write rupees 100. So now both the sides are balanced 2250, 2250. Being being discount allowed by Shyam on payment made to him. Usually, whenever customers pay promptly, some businesses offer trade discounts. Okay, so the next transaction is on 30th April and cash sales for the month rupees 8000. So, how do we record a cash sales? Cash account debit because we are receiving cash worth rupees 8000 to sales account. Sales is a nominal account by nature. So, we will credit. What is the rule for a nominal account? Debit all incomes, credit all gains and revenue. So, that is why sales account will be credited. Being the goods sold for cash. I'm gonna die editing this. Okay, now next transaction, 30th April. Again, 30th April, there are three line items. One is cash sales, one is paid rent, and next is paid salary. Okay, so rent and salary both are expensive, right? They are of a similar nature. So, and they have both been paid in cash. So instead of me writing two entries separately, rent account debit to cash, salary account debit to cash, I can club both of them into one entry. I can club both of them into one entry and write it this way. Rent account debit. How much is the rent? 500 rupees. Salary account debit 3000 to cash account. I add up both these figures 3500. My narration will be as follows. Being rent and salary paid in cash. Also, I have passed both of them in one entry because they're being paid on the same day. So it makes no sense for me to write it separately. There is no harm in me recording each transaction separately. But when I can do it together, then why not? So this was the first lesson on how to write a journal entry. We have constructed journal entries on the basis of the rules that we learned in the last lecture. In the next coming lectures, we will see how to write journal entries for particular cases. In, for example, prepaid expenses, outstanding expenses, loss by theft, insurance claims, discounts. Will be depreciation, purchases of fixed asset. We will be seeing all of these next in the next few videos. So that's all for today's lesson. See you in the next videos.